Hey everyone, and welcome to The Explainer. Today, we are going to break down a trading strategy that is so simple but so powerful. It comes from a trader named Marco, and his whole secret is this: understanding exactly why the market sets traps for traders, and more importantly, how you can use those very traps to your own advantage. So let's get right into it. I mean, come on. You've been here, right? We all have. You spot a trade setup that looks absolutely perfect. It checks all the boxes, follows every single textbook rule. You put your money down, feeling great about it, and then, bam, you're stopped out almost instantly. It's got to be one of the most frustrating things in trading. And today, we're going to figure out not only why it happens, but how to turn it on its head. All right, so here's our game plan. First, we'll pinpoint the exact trap that catches so many people. Then we're going to decode this key idea of liquidity and see how these traps are actually built. After that, we'll learn the one simple counterintuitive rule to flip the script, watch it play out in a real trade, and wrap things up by adopting a completely new way of looking at the market. Okay, so let's start with the trap itself. And the really ironic thing here is that it's often built using the very ideas we're all taught to trust. Things like support, resistance, and shifts in market structure. This is the classic painful scenario. The price pushes up and takes out a previous high, right? That's our break of structure. So what do? We wait for that little dip, that pullback to what looks like a solid new floor. We place our buy order. And almost like clockwork, the market tanks and smashes right through our stop loss. It's confusing, and it just plain hurts. And here is the absolute core insight from Marco. These patterns aren't failing you by some random chance. He's saying they are designed to work, but only for a little while. They work just enough to trick you, or as he puts it, to induce you into taking a trade. The whole point is to build up a big pool of orders that the bigger players can then trade against. Right, so that pool of orders has a name, and it's the one key ingredient that most traders completely miss in their analysis: liquidity. This is the fuel. This is the force that's being manipulated to set up those traps we just talked about. And you don't need some super complicated academic definition for this. According to Marco, just think about it like this: liquidity is simply the rusting orders in the market. And the easiest, most powerful way to visualize it? Just picture a giant pool of other traders' stop losses, all clustered together in really predictable spots. And focusing on this one simple idea, well, that's the secret sauce behind Marco's success. It's all documented. By just understanding where these pools of stop losses are likely sitting, he's been able to call market moves with incredible accuracy, banking over $500,000 in prop from payouts. Okay, so we know what liquidity is, we know it's a pool of stop losses, but how exactly are these traps actually engineered? This is where we have to take everything we learned from a trading book and basically turn it upside down. This slide just nails the mindset shift. On the left, you've got the common logic, right? Hey, we broke a high, the trend is up, let's buy the dip. But look at the right. The liquidity logic sees that exact same event as bait. That breakout isn't a confirmation. It's an advertisement designed to lure buyers into the market right before the trap is sprung. And this four-step process is pretty much the anatomy of the trap. Step 1, you get the breakout. That's the bait. Step 2, inducement. That's when all the retail traders see the signal and jump in. Step 3, the trap is set. All their stop losses pile up right below that recent low, creating that juicy pool of liquidity. And then, step 4, the hunt. The market reverses course for one reason: to go grab all those stops. So here's the million-dollar question. If we can see this trap being built in real time, how do we stay out of it? And even better, actually profit from it? Well, it all comes down to one simple but incredibly strict rule. This is it. This is Marco's golden rule. And I'll be honest, it feels completely backward at first. After that breakout happens and all the buyers jump in, he says, I will not even think about buying this thing until the market first goes down and takes out the low where all their stop losses are. He waits for the trap to spring on everybody else first. That's his entry signal. So the whole strategy really just boils down to these core ideas. First, you have to have the patience to just sit and wait while the market baits the trap. Second, your entry trigger isn't the breakout. Your entry trigger is the moment that liquidity gets hunted and everyone else gets kicked out of their trades. And finally, your profit target? It's the pool of liquidity waiting on the other side of the price action.
Okay, theory is great and all, but let's see how this all comes together in a real-world trade. We're going to break down a recent sell Marco took on the YM futures, which, tracks the Dow Jones.
So first he looked at a higher time frame and marked his target, this really clear area of equal lows where he knew a ton of liquidity was resting. Then he just waited. He watched the market create a bullish breakout to bait in the buyers. He saw their stop losses piling up, setting the trap. His entry only came after a price swept a different internal high, which was his signal that the reversal was on. And the result? A beautiful, clean move straight down to his target for a massive 1-to-10 risk-to-reward ratio. Just incredible. When it's all said and done, this isn't really about memorizing a new setup. It's much bigger than that. It's about a fundamental shift in how you see the market, how you read price action for good.
But of course, no strategy is a silver bullet. Let's be real. The pros are huge. It's simple, the rules are incredibly clear, and this pattern is fractal, meaning it works on any market, any time frame. But the challenges, they're all psychological. This demands an extreme amount of patience. You have to actively unlearn old habits, and you absolutely must control that gut instinct to chase a move before the trap has actually been sprung.
So, the biggest thing I want you to take away from all of this is to start asking yourself this one simple question every single time you look at a chart. Are you reacting to what the chart is actually showing you? Or are you reacting to the story the market is trying to tell you to get you to do something? Answering that one question honestly can change your entire trading career. Thanks for tuning in to The Explainer.